What is going on, YouTube Nation? This is Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm earning some dividend income from this cheap dividend stock today, and I really want to go over this one real quick. And tomorrow I'm going to reveal an idea that I have for my M1 Finance dividend portfolio to really turbocharge it, because it's fractional shares, and by getting a certain amount of income at a certain time and reinvesting in dividends, there's a lot of opportunities for my income stocks to buy my dividend growth stocks. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out this cheap dividend stock right now. So that cheap dividend stock is Sachem Capital Corp. I'll go over these guys real quick. This is a REIT. It's sitting at 343. The average volume is 341.26K. The market cap is 150.09 million US dollars. Year range is 316 to 602. Day range is 341 to 348, and its previous close is 343. Let's check out these guys. First, it's always important to understand their mission statement. Sachem Capital was created, I think it's Sachem, Capital was created to serve the financing needs of real estate owners and investors. We match the needs of our borrowers with capital from our investors and shareholders who entrust us to make prudent investment decisions. We seek to improve the communities we lend in by operating our company in a way that adheres to the highest standards of environmental sustainability. We also contribute our communities by helping those in need and thereby creating employment opportunities for our dedicated team. We positively impact the lives of our borrower clients by improving our economic circumstances in times of need, often to when others have denied them. By the way, I'm trying to get my caffeine in me, Starbucks style, SBUX. In helping our borrowers, we simultaneously provide our investors and shareholders with conservative opportunities to earn a fair yield and have satisfaction of contributing towards the betterment of others. We adhere to the values of integrity and truth and believe that helping our clients to achieve their goals of growth and fulfillment contributes to the higher good of our communities. Let's go a little bit more in depth again. So their business strategy, their objective is to protect and preserve the invested capital in a manner that provides for attractive risk-adjusted returns to our shareholders over long-term, principally through dividends. We intend to achieve this objective by continuing to focus exclusively on selectively originating, servicing, and managing a portfolio of short term, so they say about 3 years, real estate loans secured by first mortgages on real estate located primarily in Connecticut, as well as Florida, Massachusetts, and New York. Their portfolio is designed to generate attractive risk-adjusted returns across a variety of market conditions and economic cycles. They believe that their ability to react quickly to the needs of borrowers, flexibility in terms of structuring loans to meet the needs of borrowers, intimate knowledge of real estate markets that we serve, expertise in hard money lending, and our focus of newly originated first mortgage loans should enable us to achieve this objective. Nevertheless, they will remain flexible in order to take advantage of other real estate related opportunities that may arise from time to time, whether they relate to the mortgage market or direct or indirect investments in real estate. So, a few more things. So I'm going to go over their loan origination underwriting process. So clear-cut origination underwriting process, they focus on originating short-term, usually 12 to 36 months of first mortgage loans, and will continue to be responsible for each stage of the investment process. So they go over their investment process, which is important. So they source details from brokers, attorneys, bankers, and other third-party referral sources, as well as a form of real estate owners, operators, developers, and investors through web-based advertising, performing due diligence in respect to underwriting the loans, executing the closing of the loan, managing the loan post-closing, undertaking risk management with respect to each loan in their aggregate portfolio. The other thing is they assess the risk of the investment, but evaluating it is also very important. I really want to touch base with this. In evaluating the merits of particular purpose loan transactions, they also evaluate the impact of each loan transaction in their existing loan portfolio. In particular, they need to evaluate whether the new loan would cause their portfolio to be too heavily concentrated with or cause too much risk of exposure to any one borrower, class of real estate, neighborhood, or other issues. So remember, right here, if they determine a proposed investment presents excessive concentration risk, they will forego the opportunity. As a REIT or a real estate investment trust, they also need to determine the impact of each loan transactions on their ability to maintain their REIT qualification. Remember, 90% of what they make go back to investors. So assessing the risk, evaluating it is very important. So this is what's really crucial. They're very transparent on their website regarding what they do and how they do it. But the most important thing is understanding their revenue trends, because if there's bad revenue trends like AGNC, you're not going to really get a hike, or there's a huge risk of a dividend cut. That also happened with NLY. So a lot of people were big into NLY because of the dividends, but did the revenue back it up? Let's check that out. So I'm on macro trends right now, and of course, with any real estate investment trust or any stock, does the money back up their mouth? You can have amazing websites, amazing mission statements, philosophies, strategies, but does the money back up the mouth? And it does. 2016 annually in millions US dollars, 4.134, 2017 6.997, 2018 11.71, 2019 $12, 2020 $18, 2021 $30, and then 2022 $52. So the revenue has backed up their mission statement and their philosophy. An increase in revenue usually causes an increase in dividends and confidence with the board of directors to increase the dividends. So we're going to look at a few more things. Let's start in 2017. It was 5 cents to 11 cents to 12 cents. 2019 it was 17 cents to 12 cents. Then they jumped to 14 cents in 2022, which then they did a slightly over-aggressive move where they hiked the dividend and then they cut it by 1 cent. So their payout ratio is 108%. The dividend yield is 15.16%. Now, this is a play money dividend stock. I wouldn't put all my eggs in one basket. Of course, I like dividend stocks that have hikes, and consistent revenue and stuff. These guys have consistent revenue, but this is my play money. If I can get to $100 quarterly and start throwing it in my M1 Finance dividend portfolio, that's a strong possibility. So this one, I'm going to use the income to buy other dividend stocks, hopefully in the next 2 to 3 years, and go from there. So I'm going to go over one more thing on a recent article. So if you bought one share, you made 52 cents. And dividend growth is going to be slow. Don't expect this thing to jump up, but it's a cheap dividend stock for nice passive income. I'm going to jump real quick to an article. Again, this is a play money thing. This is the most recent article. This is on NASDAQ. Current dividend yield is 0.35 standard deviations above the historical average. Additionally, the company's dividend payout is 1.02. The payout ratio tells us how much a company's income is paid out in dividends. So a payout ratio of 1 means 100% of the company's income is paid in a dividend. Payout ratio greater than 1 means the company is dipping into savings in order to maintain its dividend. And it's not a healthy situation, which is why they went from 14 cents to 13 cents. Companies with a few growth prospects are expected to pay out most of their income in dividends, which typically means a payout ratio of 0.5 to 1.0. Companies with good prospects are expected to retain some earnings in order to invest in those growth prospects, which translates to a payout ratio of 0 to 0.5%. The dividend growth, according to them, is 0.08%. So right here, the average dividend yield has been 12.65, the lowest has been 7.67, and the highest has been 29.81%. The standard deviation of yields is 3.39. So the thing is, this one's a risk one. I always tell you guys, I'm not giving financial advice. I like some risky stocks, high yield stocks. They're increasing revenue. It's going to increase my confidence. So I'll show you how many shares I have real quick and how much I made today with them. So right here, I have a total of 279 shares. I'm not going to round, but I'll just say 279. and I made $36.35, which I'm reinvesting. So if I get to right around $100, reinvest, for 2 years and then flip it, I'll feel pretty happy with that. That way I can start buying my dividend growth stocks individually and really turbocharging it. So my strategy is to use a lot of my income stocks, dividend income, to start buying my dividend growth stocks that I can load up on. And that way the snowball effect will really start kicking in, and I don't have to take any money out of my bank account to buy my dividend growth stocks, which will be very nice. So that's one strategy that I plan on doing with that. And then the yield max Tesla option will be a nice one. It's going to be very exciting to see the dividend growth and potential dividend growth of a lot of my dividend growth stocks, especially like Franklin Resources and many other ones, using the income for these high yield stocks. Arbor Realty Trust is another one. I can use the dividend income for Arbor Realty Trust to buy stocks like Coca-Cola and just really turbocharge it. So that's one thing I have in mind for passive income in my strategies, because you can use your dividend income to buy other dividend stocks. So that's why I'm loading up on it and still buying, $500 a week in dividend stocks, growth stocks, dividend growth stocks, high income stocks on M1 Finance too. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I just wanted to go over Sachem Capital Corp. You guys take care and have a good one, and I may squeeze one in later today. Have a great Thursday.